Hi, everyone. This is Dory Clark, and we're here with our weekly Newsweek interview show, Better, where we're talking with authors and business leaders about important diversity issues. And this week, we have Mitch Kapor and Frida Kapor-Klein. They are the authors of the new book, Closing the Equity Gap. The subtitle is Creating Wealth and Fostering Justice in Startup Investing. So, Frida and Mitch, it's wonderful to have you here. And the first question that I have for you, everybody, I think, who reads the news or watches the news knows about the creating wealth part of the startup investing equation. That is on everybody's mind. But I'm especially interested in what you mean by fostering justice. Frida, why don't we start with you? What does that mean in your conception, and how do you go about it?
Fostering justice in startup investing to us means looking at high growth tech startups who have positive social impact for low income communities and or communities of color. So we're looking for not just a few investors and a few founders to win financially, we're looking for everyone to win by the addition of products and services that make day-to-day life much better for most people.
Oh, that's great. Thank you very much. And let's actually just take a step back for a moment, because I know in some of the work that you've done and what you've written about, one of the biggest challenges is that the wealth that gets created by through venture capital and through the investing process ends up enriching elites further. And Mitch, maybe we can talk to you a little bit. What is the nature of the problem here? Why does this keep happening? Why do we keep repeating the patterns that have happened in the past?
Well, there are actually a whole set of problems which compound each other to result in the exacerbation of wealth inequality. Just to pick one, it's a question of who gets funded to start these companies. And if they come from the same elite circles as where the backers come from, then that's where the wealth goes. I mean, I like to say that genius is evenly distributed by zip code, but opportunity is not. And there is all of this overlooked and underestimated talent, entrepreneurial talent that doesn't have the big pedigrees, but are people whose lived experience as founders has acquainted them with problems and issues which, as entrepreneurs, they set out to solve. And if you fund them and their companies, and those companies succeed, you are helping create wealth for a more diverse set of founders and all of their employees, their families, and the communities that they're in. And you begin to close that wealth inequality gap.
That's a really interesting point. This is Dory Clark. We're here with our weekly Newsweek interview show, Better, and our guests this week are the authors of Closing the Equity Gap. That's Mitch Kapor and Frida Kapor-Klein. Now, Frida, I want to pick up on this strand a little bit. One of the things you hear often from people in the investing world is, gosh, I wish I could invest in more women founders, in more people of color, in more people from traditionally disadvantaged backgrounds, but I just can't find them. Now, clearly, this is a premise that it sounds like you might disagree with. What do you say to that? And how do you, as the leaders of Kapor Capital, it sounds like you've managed to find people. How do you do it?
Well, I want to know how they managed to miss the majority of the world's population. Women are half, just to begin with, and underrepresented people of color here in the U.S. are a steadily growing proportion of the population. But look, I think it has to do with these insular circles and these bubbles. And it has to do with a lot of mythology about who's capable of starting a tech company, a high growth tech company. And so one of the most important things to do is to look at who sits around the table at the investment team. And after George Floyd was murdered, our partner, Brian Dixon, wrote a blog post called, "So You Want to Fund Black Entrepreneurs?" And he suggested, hold up a mirror. Start with your own firm. And it's certainly something we've seen at Kapor Capital, that when our investment team is well representative of the larger society, people feel more comfortable to pitch us from all backgrounds. Our investment criteria are on the website, and we say to people, you know what? The historical practice in Silicon Valley of a quote unquote warm intro, we think that's inherently biased. And we think if you have a great idea for a gap closing, high growth tech startup, we want to know about it. And you can submit it directly to the website without knowing anybody on the investment team. And indeed, we have written checks to companies that came in that way, where there were zero overlapping followers or connections on any social media, but a great idea that meets our investment criteria is worth a check.
That's so interesting. And Frida, I just want to ask a follow-up question based on that. I can imagine that a lot of venture capitalists or other investors would hear that and say, wow, that sounds like such a nice idea. But aren't you overwhelmed with junk? Aren't you overwhelmed with, sort of random people pitching you for random things that it, takes so much time? I'm curious, what have you discovered with this kind of open door policy, as it were?
Well, we're very clear, on the website, do you meet these investment criteria? And so, sure, we get spam. We get spam in our email and our texts every day, but a very low percentage. And we have a dedicated investment team that believe in the mission of accessibility, not just in the companies that we fund, but accessibility means we need to practice what we preach. So our investment team divide up the inbound every week and go through them. And oftentimes we'll say, you know what, you're not a fit for us, but here's another firm you should apply to. So we read them all, and when and where we can be helpful, we are. But we really discourage people who aren't tech startups not to apply. Yeah. We're the wrong place.
Let me add one thing. We ask people to self-qualify on the website. If you want to submit an inquiry, we ask a series of questions that get to the heart of what we're about. We believe in funding companies that close gaps of access or opportunity or outcome for low-income communities or communities of color. And we ask people to say, well, how do you do that? And so that actually cuts out a lot of people who realize, oh, this isn't for us. Or if people, put in something that's obviously not a fit, they get a polite response.
No thanks.
So it's just part of our overall investment rubric, and we haven't had trouble managing that open door policy.
One thing I'd like to add there too is that we are what's known as sector agnostic. If you're an ed tech company, which we have a lot of, you can see a lot of the gap closing in ed tech or health tech or fintech, climate. So we invest in any sector. If you're a tech startup, early stage tech startup, but you've got to demonstrate it, as Mitch said, do you close gaps? Your core business needs to close gaps.
That's fascinating. Thank you very much. I think that's a really interesting perspective. Now, Mitch, I want to drill down with you for a moment. You have a strong, even legendary background in technology. You're the founder of Lotus Development Corporation, the creator of the Lotus 123 spreadsheet, which certainly just about everybody, at least above Gen Z has used at some point, and so. It might be surprising for some people that advancing equity is an issue that someone who comes from such a traditional tech background might embrace. Can you talk a little bit about why this issue is something that matters to you and how you personally got invested in it, when it probably would have been easy to just hang on the proverbial yacht, as it were?
Which I never had, but sure. I guess the first thing is, Lotus was financially a hugely successful company, but it was also extremely different in its own time. Witness that When we hired Frida, we lured her to come by saying and meaning we wanted Lotus to be the most progressive employer in the US. And this is in the 1980s, and the culture that was created was extremely, and policies and practices ahead of its time. So this isn't exactly new for me, but when Frida and I got together as a couple in the 90s, so a decade after Lotus, began a process by which our work kind of began to organically come together. And Frida's been an activist forever. And we would have these conversations, and she'd be looking at my angel investing and saying, well, what about if you aligned the angel investing you're doing in line with what your personal values are? I was skeptical, like every entrepreneur, I think, who thinks about this for the first time. But the more I thought about it, the more I realized we should give this a try. I believe in experimentation, in collecting evidence. And so more than a decade ago, we set out to say, well, suppose we did just invest in companies that close gaps. What would that be like? And it turns out it felt great. It worked really well. We had terrific financial returns, which we've documented. And it was really a self-reinforcing, life-changing kind of experience to bring the best of what I think of as the startup and entrepreneurship world aligned with a set of values about genuinely making the world a better place. And contrary to the received wisdom, that is not impossible. It is possible if you try.
So Mitch, I love that. I want to follow up because I can imagine, again, the skeptical voices might say, oh, well, this sounds nice, investing in gap closing companies, but aren't your profits really taking a hit here? Isn't this more of kind of a charity thing? So can you talk a little bit about the actual money? Because you are arguing that, yes, this can be a profitable endeavor. For people who are skeptical about that, how do the returns look comparatively? And, how much of a hit, if any, are you taking by having a sort of social mission inflected investment strategy?
Thank you for asking it. And this is really central. We've published impact reports in 2019 and then with an update in 2022, the bottom line of which is across our entire portfolio since we started being all in on gap closing investing in 2011, the returns place us in the top quartile, the top 25% of all venture funds of our size, regardless of how they invest. And that's in well over 100 companies. And so the results, really speak for themselves that it's not one company or two companies. It's not an accident. It's across. And that's, roughly $75 million worth of investments. And so it's a whole set of data points. And because the reports have been published, anybody can look at them and see for themselves. It really undermines this unchallenged belief that impact investing is necessarily concessionary.
And one thing that I think is important to add with these top quartile financial returns, meaning we're doing better than 75% of venture capitalists who say we're only investing for returns. So they've got one focus and they can't beat us. We've got multiple areas that we're looking at, and we still come out on top. And the majority of our founders are underrepresented relative to everybody else who are tech startup founders. So that's women of all backgrounds. That's Black and Latinx men and women.
Well, that's terrific. And Frida, that actually leads me into my next question, which is one of the features that we have in the Newsweek Better Show is that we ask our interviewees to nominate a better leader of the week, to talk about some of the people on the ground who are walking the talk and exemplifying the principles around building a more diverse future. And you and Mitch have identified someone that you actually profiled in Closing the Equity Gap. Her name is Kat Perez. Perhaps you can talk a little bit about Kat and why Health Sherpa, Kat's organization, is of interest, and why you decided to make that nomination, if you don't mind.
I don't mind at all. pleased to do so. Kat is a force of nature, and Health Sherpa, the company she co-founded, is a perfect example of a high growth, financially successful gap closing company. So first about Health Sherpa for a minute, which is that they came up with a better way to sign up for the Affordable Care Act, making it very simple and very quick, so that low income families can sign up and get that health coverage that they've been unable to have previously. And so that disproportionately affects low income families. So right there is the gap closing. Kat actually won a $1 million Salesforce hackathon for building a healthcare.gov way back in the day. But Kat, as I mentioned, she's the co-founder, she's the chief product officer of Health Sherpa. She self-defines as a Puerto Rican, Korean, queer woman. And she's unapologetically all three, which is great. So who she is and how she leads reflects her commitment to gap closing and to DEI principles. She is incredibly talented. She is very interested in helping others. So you'll see her giving her advice and her wisdom and answering questions to other founders of all backgrounds. Telling about the missteps that she might have made, how she was successful. She talks about how she has built intentionally a culture of inclusion. And one of the things that I think is really important that we see about all of our founders, exemplified by Kat and Health Sherpa, is looking for the alignment where employees feel passionately committed to the mission. Not only are they great engineers or great finance people or great marketing people, but they feel passionately, often because of their own lived experience, about helping this company succeed because it helps people and families and communities like the ones that they're from. And so when you've got that complete alignment, then you have much better chance of a financially successful company. So Kat is very forthcoming about her original missteps and how she corrected it, and how, if you want to get ahead at Health Sherpa, not only do you do the specifics of your field, but you also show your commitment to the mission of the company.
That's terrific. Thank you very much for sharing that. And we're excited to have Kat Perez as our Better Leader of the Week. Now, Mitch, I want to turn to you. If you were being asked for advice by someone who was let's say a nascent entrepreneur, they're a low income person or they're a person of color, they're trying to break in, they're struggling with some of the problems that you've identified with, that maybe they don't have a pre-existing social network where it's easy to get investing. What would your advice be for that person in terms of initial steps they can take to begin to get noticed and begin to get some traction so that their company can grow?
Well, a couple of things. First, just as a starter, in comparison with, say, when I was starting out, which was admittedly a very long time ago, there are actually a wealth of resources online addressed specifically to people who fall into that designation. And so self-educating to understand the resources, the challenges, the groups that are out there, I'd say that's layer zero. There are also now a number of accelerator programs and incubator programs very specifically oriented towards first-time founders from underrepresented groups. And so it's really worth finding out the extent to which whether you're able to participate in one of those. Some are residential, some are not. They can be done online. Some are full-time, so you can't be working. Some are part-time. And so I would say becoming a member of a community and going on a journey with others who are going along with you and those who have been there before, I would really emphasize that is materially going to help the prospects of succeeding. You won't feel so alone. You can get some advice. You can find You can find colleagues. The entrepreneurial path is always difficult, but I think, as someone said, if you want to go fast, go alone. If you want to go far, go with others. And I'm in favor of the latter.
I would add to that, because of the wealth of resources in the startup ecosystem, I would encourage founders to be very direct about their values and the purpose of the company. We often get a pitch from someone and where they've talked in their application to us about, their own lived experience, their passion for gap closing. Then we see their pitch deck and none of that is in there. And they tell us, well, everybody we've talked to said, take impact and diversity out of your deck. And we said, if it's not in your deck, we're not going to write a check. So if all of us hide, we can't find each other. And so our advice to founders is show up as who you are and look very carefully, even if it takes you a little longer, for values-aligned investors. Because when you hit a speed bump and you've taken money from investors who aren't values-aligned, they're going to say, get rid of impact, get rid of diversity, just focus on the business.
Yeah, that's a really interesting point. Thank you. That's very helpful. And as we're winding down, we're coming into the denouement of our conversation. Frida, I want to turn to you. I know that one of your goals, for both of you, an explicit goal, is to create a conversation and hopefully to convince other investors to begin to take a more nuanced lens and not be strictly focused on the profit motive, but also to expand the criteria by which they evaluate investing. Can you talk a little bit about that and what that would look like? What exactly would, if we're painting a future vision here, what would it look like if other investors in a big way were to get on board, and what would they need to be doing differently to make that happen?
Well, it's a great question. And we think that increasingly younger generations are saying, we don't want to invest like our parents and our grandparents invested. We want to invest consistent with our values. And by the way, we want to work for companies who are explicit about their values and take a stand. So I think if investors want to attract all of that new wealth, and let's be clear, one of the largest wealth transfers in history is taking place now with boomers giving their money to their kids and their grandkids. Though investors are going to find that they don't have as many clients unless they cater to the needs of the new group of investors. We are continuously asked, how can I invest in your companies? And so creating vehicles where smaller dollars, so-called unaccredited investors, can participate in these new kinds of companies will just increase your success, and the amount of money, the amount of assets under management is the term of art that you have. So I think letting people know that there is a huge demand for values-based investing, a huge interest in how to do it, and there is an enormous supply of great talent to back.
That's fantastic. Thank you very much. We've been here talking with Frida Kapor-Klein and Mitch Kapor. They're the authors of Closing the Equity Gap. Mitch, I want to give the last word to you. For folks who want to learn more about your book, about your work, and perhaps they are investors who are getting on board with this, where would you send them, and what would be the place so that folks can learn more?
Well, there are a couple of places. First of all, there's a website for the book. It's closingtheequitygap.com. And there's also the Kapor Capital website, kaporcapital.com, which has a list of all the portfolio companies organized by sector so people can explore those particular companies. It also has a listing of all the job postings that are open across all those companies, nearly 1,000 of them. And Frida, what am I leaving out for resources?
Well, certainly on the Kapor Capital website, it's very specifically, as we mentioned, the investment criteria. Yes. And how to submit a pitch if you fit those investment criteria.
Excellent. So we can send people to Kapor Capital and to your website. And you are, again, both the authors of the new book, Closing the Equity Gap. Mitch Kapor, Frida Kapor-Klein, thank you so much for being here and joining us.
It's
Thank
been
you.
a pleasure. Great conversation.
Thank you. This is Dory Clark with our weekly Newsweek interview show, Better. We'll see you next week.